You know that feeling when a breakout looks real? You take the trade and it fizzles because no one was actually behind the move? This tool fixes that problem. Volume Sentiment Breakout Channels draws smart boxes around price to show where the market compressed, then paints who did the work inside the box, buyers or sellers. When price finally breaks, you're not just seeing a line get crossed, you're seeing a shift in conviction backed by the participation inside that range. That's the edge, breakout plus sentiment. We're going to build this on TradingView, which is the platform I'm using in this video. If you haven't signed up yet and you want to follow my exact setup, there's a link in the description. Open any market and time frame you like. I'll use a clean chart on a popular pair so you can see everything clearly, and then add the indicator. In the indicators window, search for Volume Sentiment Breakout Channels Algo Alpha and load it onto your chart. It's open source, so you can read the code if you're curious how it works under the hood. Here's what you're looking at once it loads. The indicator draws a transparent box around price whenever the market is compressing. Think of these boxes as potential accumulation or distribution zones calculated by a volatility-based channel. Inside each box, the range is binned into thin slices and the script totals volume by candle direction. Green areas show buy-side dominance, red areas show sell-side dominance. That gradient isn't just eye candy, it's a heat map of who's been active inside the box. Running through the visuals will make the logic feel obvious. First, the box itself is the active channel. Price is moving inside it while the indicator keeps score. The shading tells you sentiment. Greener means buyers dominated those slices, redder means sellers. You'll also see a dashed midline running through the box. That's the channel's equilibrium, a handy reference for bias and invalidation. On the break, the script prints a simple marker, an up arrow when price breaks up through the box high, or a down arrow when price breaks down through the box low. After the break, trail lines extend to show the ongoing leg so you can track the move without cluttering the chart. When a clear break happens, the old box clears, a new box starts forming, and you can see the shift in control right away. Let's walk the settings so you can tune it to your speed. If you prefer clean signals, turn on strong closes only. That tells the script to count only proper closes through the boundary, filtering out weak pokes. Next, adjust the normalization length. Faster markets and shorter intraday trades respond well to a smaller window, around 50 to 80. If you're trading slower charts or you want smoother behavior, push it up toward 100 to 200. This single tweak changes how quickly the boxes adapt to current volatility, so take a few minutes to feel out what matches your market. Everything else is mostly visual. You can keep the default gradient and text since they're already built to make the bias obvious at a glance. Now, let's use it to trade. The idea is simple. Wait for the box to form, read the sentiment inside, and only trade the break if participation agrees with the direction. For a long, I want to see a box with net buy-side dominance. That means the interior is mostly green and the sentiment text confirms buyers have the edge. If price closes above the box with an up arrow, that's a breakout with participation, not just a random wick. For risk, I'll use the midline or the opposite edge of the box as my invalidation. If price loses that reference after the break, the idea is wrong and I'm out. For targets, start with something modest, 1.2R to 1.5R, then trail the rest using the extension lines the script plots as the move develops. If momentum holds and the trail keeps stepping up, great. If it stalls, take what the market gave you and reset. The short side is the same story flipped. I'll wait for a box with net sell-side dominance, more red than green, and bearish sentiment in the text. When I get a down arrow close through the box low, that's a break with bear participation. I'll tuck my stop just above the midline or the opposite edge and work the position the same way. Aim for a first target around 1.2R to 1.5R, then trail if the extension lines keep stepping down with the move. If price snaps back into the box and reclaims the midline, I'm accepting the loss and move on. The point is to only take the breaks that have weight behind them. Let's put all of that into a clean flow you can repeat. During quiet periods, you'll see a fresh, transparent box print around price. Don't chase the first wiggle. Watch the gradient inside the box. Is it filling green across the ranges buyers care about? Or is it red where sellers are pressing?
Check the text readout too, current and overall sentiment update live. When the push comes, focus on the direction that already dominates the interior. If buyers own the box and you get a proper up arrow close, that's your go signal. If sellers own the box and you get a down arrow close, do the opposite. The beauty is that the indicator clears the old box once the breakout is confirmed, so your chart doesn't turn into a mess of old rectangles and guesswork. A couple of small improvements make a big difference. First, don't ignore the midline. If you're in a long and price can't stay above the midline after breaking out, momentum probably isn't there. Second, let the extension trail do its job. If the line is stepping up and price is respecting it, hold a runner. If it's flattening and price keeps slapping it, take the clue and scale out. Third, match the normalization length to the session. During highly volatile windows, crypto open, equity cash open, shorter settings react faster and boxes refresh sooner. During slow grinds, longer settings keep you from overtrading noise. These tweaks line up with how the script is designed to be used in fast versus smooth regimes. If you're coming from classic breakout tools like Donchian channels or simple range high-low markers, the difference here is context. Those tools tell you where price escaped. This one tells you who pushed it out. By pairing direction with participation, you filter out a lot of empty breaks and focus on the ones with real backing. That's why the combination of box, gradient, sentiment text, and the up and down arrow markers is so practical. It compresses a full read, structure plus intent, into a single glance. Let me give you a quick example flow so you can see the timing. Price compresses into a fresh box. The interior starts turning green and the text shows net buying. I'm not in yet. I want the break. A few candles later, the top of the box is tested a couple of times, then I get a strong close through the boundary with an up arrow print. I'm in on the close or the first pullback, depending on my plan. My invalidation is the midline. If price spikes back through the top of the box but holds the midline and the extension line keeps rising, I'll keep the trade. If it loses the midline quickly, I cut it and look for the next setup. This keeps me aligned with real participation instead of guessing off single candles. Here's the mirror. The box forms, the interior shades red, and the sentiment text shows net selling. I wait. When the down arrow fires on a proper close through the box low, I take the short. I'll park my stop above the midline and work the purse target around 1.2R to 1.5R. If the extension line keeps stepping down and price respects it, I'll trail the winner. If buyers yank it back into the box and the midline flips, I'm out. Again, the rule is simple. Trade the breaks that match the participation inside the box and keep risk tight around the structure the indicator gives you. One last note before we wrap. This script is open source, so if you're the type who likes to know exactly what's happening, read the code and the description on its TradingView page. There's a full breakdown of how the channel uses normalized highs and lows to find compression, how the volume is binned and signed by candle direction, and how the labels and gradients update in real time. Transparency is rare with tools like this, and it's a big reason I'm comfortable using it on stream and in guides like this. This is not financial advice. Use this for education, tailor it to your risk, and double-check your thesis before you hit buy or sell. Back-test it on your market, forward-test it small, and only scale when you've got stats that make sense for you. If you found this breakdown useful, tap like, and if you want to see more deep dives like this, consider subscribing so you never miss the next one. Thanks for watching. See you next time.